Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Hello and welcome to the Mineral Rights Podcast. I'm your host, Matt Sands, and I'm joined by my co-host, Justin Williams, and we're here to help you make the most of your minerals and royalties. In this episode, we're going to talk about mineral rights and energy news for February of 2026. And Justin, there are two big headlines that are really dominating the news cycle this time around. And the first one is really related to this extreme cold snap with Winter Storm Fern. Do you want to dive into that?
Over the weekend, the storm led producers to losing up to 2 million barrels per day of oil production, about 50% of the total U.S. oil output, according to estimates from Reuters. And Matt, that's a pretty severe disruption, but it seems like it's going to bounce back. The article goes on to talk about the different areas. So according to estimates, energy aspects, the Permian alone saw production outages of around 1.5 million barrels per day. However, production is already recovering, and the lost output in the Permian is down to some 700,000 barrels per day. Output's expected to be restored fully by the end of the month. So that's a quick snapback, Matt. Much, in contrary to what happened in 2021, which just seemed like the perfect storm in that area.
Yeah, exactly. A perfect storm of things that happened, no pun intended. You had things like certain power plants that were being taken down for maintenance and things like that. And they were gas-fired power plants or coal-fired power plants, combined with the drop in wind and solar electricity production caused the Texas grid to have severe problems. In fact, I think they had, there's a number here we saw that it was about 4.5 million households, I believe, were affected in Texas alone in 2021 during that storm. This time around, it seems that the good news is that the overall electricity system proved to be more resilient. Sounds like at the peak, there were about 1 million people across the country that lost power. As of Monday morning, the 26th of January, that was down to about 800,000. The South got hit the hardest, no surprise, because they're not used to having those kind of extreme ice storms. And, when you have ice build up on tree branches, limbs break, and that causes power lines to go down. And it's going to take, a little bit of time to get everything back up and running again. But in the meantime, this has had a pretty significant impact on oil and gas prices, which I know is of most concern. Obviously, staying warm is the number one concern when it comes to, the Maslow's hierarchy of needs. We get to, okay, everything else is good. Now let's talk about how this is going to impact my royalty checks. And in the case of this particular storm, we had natural gas futures prices increased by 29% to over $6.80 per million British thermal units. That was the highest level since 2022. So that's 4 years almost. And then in the meantime, you had the Henry Hub natural gas spot price that surged to an all-time high on the 26th of January to $30.565 per million BTUs. And that's, a couple of dollars higher than the previous record, which actually was set on the 23rd of January this year. And then you have to go back almost 5 years to, again, that previous storm, Uri, to when we had $23.60. So that's the daily average price. Now there's, daily highs, it'll go up and down. The daily high on the 26th of January was $53.75 per MMBTU. Now that doesn't mean that you're going to see $30 per MMBTU on your revenue statement when you get your gas royalties for January of 2026. What it means though is that daily average, you factor that in along with the rest of the days that they're selling. And it's sort of a weighted average, right? When you look at the price on your revenue statement, it reflects what the price they've received over the month. And so it's going to definitely be higher though. At the end of the day, the futures prices versus the spot prices, let's talk a little bit about that because there's two numbers I threw out there, that $30, which is the spot price. So that's sort of the instantaneous price. If you have to purchase gas on the spot market today or sell it, for that matter, that's the price that it would trade for on the Henry Hub, and that's basically in Louisiana. Now, the futures price, that is basically a contract for future delivery of natural gas. In this case, it's the next month, which is, we're talking about, I believe it would be February, would be what's trading right now, as we're talking about this on the 28th of January when we're recording this. And that means that if you're going to lock in, I'm going to sell a certain amount of volume in February, that the futures contract, it says that you're going to get $6.80 per million British thermal units, and that's what's being traded there. So there's a bit of a difference there between the spot market and the futures prices. All that to say, usually when you look at the gas prices, those two are pretty close together. In this case, just because of that major supply disruption, it caused it to spike and then come back down. But even today, as we're recording this and looking at the prices, it still hasn't recovered. It's almost up 100 and some odd percent since last week. It's still sitting around $6.76 per million BTUs. So big impact on gas markets, Justin. Less so on oil, but gas for sure.
Like you said, though, with the contracts, so natural gas futures contracts expiring in March are trading around $3.90, the article says, which is 43% below current prices. So like you said, Matt, you may not see that impact directly on your check because of the way that they're doing their future contracts and the way that the operators are getting paid for that gas. But it is really interesting to see, and it's really opens your eyes how much a winter storm can impact the natural gas prices, where I think this is a situation where often we, see it more when the prices are low. It affects us as a mineral owner, but this is a situation where we'll see what the impact of the overall bump is too.
Yeah, that's a great point. I think this storm really highlights how sensitive the market is, at least the gas markets in particular, as far as supply and demand. And when you have the significant increase in LNG export demand combined with these sort of short-term weather disruptions, it can cause a big impact on prices. And that's what we saw. Now, like we talked about, this is going to recover, but into early February, there's a forecast of extended cold weather that could keep gas prices high for a little bit longer. And so it'll be interesting to see how, after the dust settles, after the demand decreases. So what happens is you have this severe increase in demand because of the extreme cold temperatures. Everybody needs to use more energy to heat their homes. And then combine that with the fact that when you get cold temperatures in the Permian Basin in particular and other areas in the South, where it's normally warm, they don't build into the infrastructure this insulation and things like that to prevent gas hydrates from freezing off the gas lines. So that's part of the issue.
The article, Matt, kind of talks about some of the numbers when it comes to U.S. consumption spikes, and I thought those were really interesting. The article mentions that by Monday, January 26, total U.S. natural gas consumption rose to 129.86 BCF per day, which is an increase of 13.6 BCF, about 12%. And then residential commercial demand led the gains, rising about 14%. And then power burn increased approximately 10% as generators met the elevated heated and electric load. So, Matt, this isn't to mention either. The article talks a bit about industrial demand. But so this is a huge increase percentage-wise. And I don't think you would really assume that it would make that much of an impact, being such a regional area like the Permian Basin, that small area coming offline. But there's so much production coming from that area.
You're absolutely right. Well, let's dive into this next article here.
The next article here is about Trump and Greenland. We've been hearing a lot about this, certainly been talked about a lot in the news recently. So their article here says that President Donald Trump told CNBC that mineral rights are part of the Greenland deal framework that he announced this week in Davos, Switzerland. And Trump says he wants to block China's and Russia's ambitions in the Arctic. So, Matt, this is a really complex situation going on that it's being talked about from many different angles. But what this article kind of highlights is in Greenland, Beijing had a financial interest in one of the mining projects in the south of Greenland, and it's the third largest land deposit of rare earths in the world. This is something that spans even before the Trump administration, where the Biden administration previously pressed earlier for the developer not to sell to a China-linked buyer, and that project ultimately ended up with critical metals. That's kind of the stage that's been set there, and these deals are already being talked about, and maybe why this is coming up now. But that mining project has been effectively frozen since Greenland banned uranium mining in 2021, and the project's tied up in litigation. So it makes me wonder if this doesn't have to do with all of these people wanting to bring this to the head as far as the investment that was put into those critical minerals. But it really seems like the administration is saying that this comes down to national security. That seems to be the consistent theme, and critical minerals are certainly a part of that, though maybe we don't have the demand for it right this second. This may be we're looking in the future at that, or maybe it's a location thing for national security.
Yeah, I think you're right. I think there's definitely a lot to it. And of course, you can read at this point, international leaders get bent out of shape by Trump's negotiating tactics. You think that they would have seen this this playbook. It's the same one every time. It's, the extreme anchoring on this very extreme thing, like, hey, we're going to buy Greenland, we're going to take over, we're going to send the military there. And then, actually, what we really just want is to get secure access so that we can block our competitors from building military base there on our back door. It's a similar situation to what Russia has complained about with respect to Ukraine joining NATO and things like that. So I guess it's not a big surprise to see how this shook out. I would certainly, argue the way that it was done and all of that, and there to be a whole discussion on that. But I think the most important thing from our standpoint is this: the rare earth minerals and these minerals that are critical for defense and strategic industries, and getting access to those mineral rights and gives us another sort of relatively geographically close location, like you were talking before we hit record, Justin. With Greenland kind of being in our back door, better than going to some other country across the world. So there's lots of ways we're trying to line up options for getting more access to these critical minerals. Of course, that said, it's going to take decades, I think, before you get a plant or a mine up and running and you have the whole supply chain going.
Right, man. And we had talked about previously how China has some, I can't remember, I believe it was a satellite station. That's correct, in Greenland. And, that's a huge strategic and national security issue. So I'm sure in a big part, that's really the more, urgent demand. Though the rare earth minerals are certainly going to be a long-term strategic position, I think it also comes down to national security from a standpoint of it's close to us.
Yeah, I think you're exactly right. I think there's a lot into it. And, remains to be seen how this will actually play out and if we'll get access or we'll have any of those mines that actually get built and we get the raw materials moving to the refineries and the plants to make the magnets that we need for military and industrial uses. So, it'll be interesting to see what happens there, but not a surprise, I guess, how it shook out. It's a good thing it was done peacefully. There's not like another potential conflict that we're having to deal with. But, it is what it is, and we'll just leave it at that and move on to this next one here. So, Justin, you want to talk about the new federal rules on oil and gas leasing in national forests?
So revised regulations governing federal oil and gas resources on national forest system lands have been announced by the U.S. Department of Agriculture's Forest Service. So the revisions are designed to modernize and streamline the process for managing energy development across millions of acres, which certainly sounds like it was written as a sales pitch as we go into this. So it has a lot to do, Matt, with the permitting and then the coordinating when issuing permits. So they're redefining the leases, kind of streamlining the process, making it less of a headache for development of these lands, which I think makes a lot of sense. I would guess that the last time this was touched and updated from a process standpoint was many, many years ago.
Yeah, I think you're right. I think it's good that they're looking at actually, following through with streamlining some of these things they talked about doing during the campaign, and that when the various secretaries of these departments were appointed, that they said that was going to be a goal for them to get across the line. And so it's good to see that they're doing this, because I do think that a synergistic relationship between federal agencies and oil and gas producers is possible. I've seen it firsthand, in Pinedale, Wyoming, where you have sensitive wildlife habitat that they have a record of decision that allows them access only during certain times of the year that minimizes disruption on wildlife. And, if you expand that to the overall national forest system, I think it can be done in a way that protects the environment and wildlife while getting access to oil and gas land and reserves. So this article is from the Midland newspaper, and so it talks a lot about Texas and New Mexico acreages and certain forest areas to highlight, and and their proximity to potential oil and gas production. I think of highlight, if in Texas and New Mexico, I think it's important to think about, because you wouldn't think of Texas as really having any national forest land. In fact, I was surprised at the size of the acreage of some of these. And for example, when you look at parts of, I would say maybe the northwest part of the Haynesville Shale, you have the 153,000 Angelina National Forest in Angelina, Nacogdoches, San Augustine, and Jasper counties. Then you have Sabine National Forest, which is about 160,000 acres. And that's part of the boundary between Texas and Louisiana on the sort of the border of the Sabine River watershed within Sabine, San Augustine, Shelby, Jasper, and Newton counties. And so again, you get into these areas that there's definitely some oil and gas development. And certainly in New Mexico, there's always been a big focus on national lands, and a lot of that's BLM land and state lands. But there are national forests that do impact certain parts of the state. In fact, the San Juan Basin is a huge gas play, and there's 1.5 million acres in northern New Mexico that borders that gas play. So this has an impact. Although it's really interesting when you look at the numbers, and they quote in this article, there's 5,154 federal oil and gas leases that cover 3.8 million acres, which is only 2% of National Forest System lands. And then of those, only about half are producing. 2,850 leases span 1.8 million acres across 39 national forests and grasslands that can contain producing federal oil and gas wells. So, the numbers are big. We talk about millions of acres, but then when you talk about the land mass of the United States and how much national forest we have, I was surprised that it's as small as it is. The 2% number, that's really not a huge percentage of the overall federal lands that is impacted currently by oil and gas drilling. And, as long as they keep those, review processes and the enforcement, and protection of the land, then I think this whole streamlining thing is going to be a benefit certainly to mineral owners that have oil and gas interests that border national forest, that require these types of permits and reviews to get completed in order for them to develop your minerals along with the national forest or the federal land. So that's certainly something I think to watch out for.
Even with the amount of leases at, over 5,000 leases, I'm sure, like we talk about a lot, this is a business decision for the operator. And this is extra red tape is put onto the operator. So that business situation or business scenario must really be there, for the operator to pursue, national forest lands. I'm sure if there's other options for the development of reservoirs, or I'm sure that they're looking at other options as well when it comes to even a financial or business analysis of them.
Yeah, that's a great point. Well, do you want to talk about the latest rig count?
Yeah, man. So it's flat. It's pretty much flat. That kind of sums it up. So not a whole lot of movement. Down 2 rigs in Louisiana, up 1 in Texas. It says down 1 in Utah, and up 1 in Wyoming. So not a whole lot of movement, man. It looks like there was 2 new units in the DJ Niobrara, but other than that, not a whole lot of activity. I did think it was interesting that Canada is up 5 units per this report here.
Yeah, definitely. For our neighbors up north, they're seeing a little bit increased activity. That's most of the North America increase was Canada. Like you said, there's only one net rig added this year, both between land and offshore. And then, really those 2 rigs are in the DJ Basin, which is kind of surprising, to be honest. But a little bit of shuffling across different states. And what we're seeing is 544 rigs, which is only up 1 from the previous week, and compares to 576 rigs a year ago. So down, from where we were a year ago. But, like you said, it's sort of this very slow drip and slow decline and or stabilization. I think as we see prices where they're at, again, this is something to highlight and to mention that the price increases that we saw in January of 2026 are not necessarily going to translate to increased spending and more drilling, because by the time that those impacts shake out, prices will have resumed their kind of normal balance between supply and demand, and then you'll have prices more based on market fundamentals than these sort of short-term supply disruptions and demand increases. So, I expect that we'll see sort of the same focus that we saw towards the end of 2025 with, a slight increase in drilling of gas and more of a focus on gas, and then maybe more of the status quo and maybe a slight decline in oil, depending on how oil prices shake out. And again, I think we're still feeling the effects of this storm with oil at $62.90 per barrel. I do think it's probably going to drop a little bit once the Permian gets production back up and running. So more to come, but a lot of it will depend on kind of that long-term economic outlook for the country and internationally, and what are the other producers doing as far as oil and gas production, and that'll over the long term dictate prices more so than short-term cold snaps.
Well, I think that does it for February, Matt. A lot of news going on, though, with everything with Greenland. It's interesting to see that we're talking about minerals as much as we are.
Yeah, and it's not all, like we talk about, it's not just about minerals or just about oil. It's there's a bigger picture, and it's kind of maybe one of the pieces of the puzzle. But, it's this global game of risk that's going on, and access to resources, or maybe it's a game of Catan. I don't know if anyone here listening likes to play Catan. That's one of my favorite board games. And as these countries try to get access to the key squares on the grid, so to speak, that give access to those resources that we need, causes potential conflict. And that's where all of this ends up, I think, boiling down to that. It's like a big real life game of Catan. All right. Well, thanks again for listening. And thanks again, Justin.
Thanks, Matt.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.